Good morning, everybody. Uneducated Economist here. So, oh wow, we got 28 people already in the live stream. That is awesome with 25 likes. Thank you so much for hitting that like button when you join in on the live stream. By hitting that like button, the YouTube algorithm will pick up the video, spread it around for more people to join in. This is going to be a really good video talking about the monetary policy coming from the Federal Reserve. Now, many people look at the president as being the person who is in charge of interest rates, in charge of inflation, in charge of all this stuff, and then they put a lot of blame on the president, even though the president himself has said that he does not have the power over some of the things that a lot of people are giving him credit or blame for, whether it's, previous administrations or the current one. So when we look at monetary policy, we have to really understand that the Federal Reserve acts independently of the president, of the administration, of Congress, of all that stuff. They make decisions based on the FOMC's understanding of what has taken place within the economy itself. Now, a lot of times we look at current information and say, hey, they are making this decision based off of the current information that is out there within the economy today, mainly like unemployment numbers or inflationary numbers or something of that nature. And although the Federal Reserve does look at a lot of those numbers, they are not making decisions, snap decisions based off of the current changes to these numbers. What they are doing is trying to maintain a particular understanding of what is happening within the economy so that they can then operate their Fed funds rate in a way that is effective to the economy. And I know this sounds very confusing, but I'll explain this. See, the Federal Reserve has the ability to adjust the Fed funds rates, which most people are focused in on as the main policy tool coming from the Federal Reserve. This is when, Donald Trump is saying the Fed needs to lower rates or they need to raise rates or whatever it is that he's saying at the time. They're talking about the Fed funds rate, which is the overnight, like the short-term overnight lending rate within the banking system. It's not talking about the U.S. Treasuries. It's not talking about mortgage rates. It's not talking about credit cards. It's not talking about any of that stuff, right? What they are talking about is the short-term lending rate within the banking system itself, right? These overnight lending rates, the short-term lending rates, and again, this is in the banking system up at the higher end, so to speak, right? Not to get too detailed into it. So when people hear the Fed should be lowering rates from Donald Trump or from anybody, really, the Fed should be lowering rates, most people focus in on things that are important to them, like mortgage rates, right? That would be like the big one. Or, the U.S. Treasury, like their return on their capital investments. This is where a lot of people end up focusing in on it. And so when you hear Donald Trump saying, I'm really smart, I know what I'm talking about, I'm really big into money, people have a tendency to agree with that, right? They're like, yeah, the dude is rich, right? So he must be really smart when it comes to the economy and what it is that needs to be done, since he has been able to acquire so much wealth, right? And this is what a lot of people end up looking at, saying, yeah, he's a smart dude, he knows what he's doing, right? However, when you listen to the way that he is talking about what it is that the Federal Reserve should do, it is almost like clueless. He does not talk about the issues that the Federal Reserve is truly facing. Like, he does not talk about how the Federal Reserve ran out of monetary policy and how the lower bound of zero and a low neutral interest rate restricts the use of the Fed funds rate. It makes it an ineffective tool. Nobody is communicating that, especially that of coming from the president. So knowing that the monetary policy from the Federal Reserve has this in their focus, the neutral interest rate, anything I hear outside of that is incorrect. There is no other monetary policy out there. So now I think about it. When the president comes out and starts using his words, it has a major impact on how it is that people feel about the economy and what has taken place, right? They hear, we need to fire Jerome Powell, and they don't know that Jerome Powell is just simply a spokesperson for the FOMC. Nothing changes about the FOMC, right? Other than one vote of one particular person, considering that there's 12 voting members. Removing Jerome Powell will have very little impact on what will take place within the monetary policy. Right? But yet, to make such a big deal out of it will then have the attention of the people And then the people will believe whatever it is that's being stated out there. It's his fault. He's the reason. It's all because of him. And now you got this credible threat that you can then deploy within the economy itself. Oh, we're going to do something. We're going to fire them. We're going to bring interest rates down. And people actually believe this thing. You can see evidence of it taking place right now. Just take, for example, what's going on with Mexico, right? 10% tariff on Mexico. And then Mexico comes back with, hey, we'll deploy 10,000 troops to the border if you pause those tariffs. Nothing's happened. They're like, hey, we're going to do this on Saturday. Come Monday, hey, we're going to pause it. Nothing has happened. No troops have been deployed. No tariffs have been, enacted. Nothing's happened. It's all credible threats. Now, could it come to fruition? Sure, right? But time will tell on that. Right now, nothing has taken place when it comes to that situation. We are seeing it happening within Canada. I see a lot of people come to me. They're like, dude, what are these 25% tariff going to do to lumber? And I'm like, on the 20% of the imported product coming from Canada, it's probably not going to have a big deal to do with the rest of the 80% of the consumed softwoods that is produced right here in the United States. And considering that the mills have been running in curtailment for the last year and a half, they have plenty of room to ramp up production. I'm not concerned about the Canadian lumber. We can produce all the lumber we want for ourselves here in the United States. Buying Canadian lumber is almost a favor to them, especially when you consider that our mills are not operating at full capacity right now. Right? How many people talk about that? Very few, right? They just look at this credible threat thing. Oh, wow, what's going to happen? It's going to cause the prices of homes to go up. And I'm thinking, no, why would it? Why would tariffs cause the price of building a home to go up, considering that almost all of the building supplies that go into residential construction is a domestically sourced item? Don't get me wrong. Bunches of it comes from Canada, right? Some of it comes from Europe. Some of it comes from Mexico. The majority is domestically produced, supplied, and used. Okay? So we have to look at these credible threats for the reality of what it is. And if you have a real credible threat that you are trying to maintain, you're going to do it like the Federal Reserve is doing and not be flip-flopping around. A lot of people say that the Fed has flip-flopped, right? That they reversed course on their Fed funds rate. They stalled. They stopped moving. They have given the credible threat of doing something different into the future, but they haven't done anything. They're sitting on their hands. Essentially been doing that for over a year. A move of 1% on the Fed funds rate is quite significant, but people thought it was going to zero. The credible threat to the economy was that it was going to zero. Emergency rate cut at 50%, or a 50% rate cut, or what am I trying to say? A 50 basis point cut. There we go. That had impacted the economy, that people thought for sure was done for emergency purposes, that the economy was going into recession, that unemployment was going to skyrocket. Everybody was convinced of this. Convinced. All credible threat. Right? The Fed hardly moved at all. Been sitting on their hands, using their words, their forward guidance to put the narrative out there for the markets to follow. I mean, it was just a couple of weeks. It wasn't even like a week ago, Donald Trump was standing out there saying that the Fed should be dropping rates and the whole world will be following the Federal Reserve. And now today he's saying, oh no, the Fed's actually pretty cool, sitting right where they're at. They made the right decision. It was just like, come on, man. Either be straight with us or not. Because now everything that you say about monetary policy, I'm talking about Donald Trump, is no longer useful information. You can't keep doing that. You can't just say for your own benefit at the time, the Fed should be doing this, they should be listening to me, and then only back up and say, oh man, actually they made the right decision. If they had followed me, it would have been the wrong decision. Like, do you see how he shoots himself in the foot for this? You can't do this. I mean, if you want to hold on to the credible threat and you want to use that to your advantage, you cannot let go of it in such fashions. To say, oh yeah, well, last week I said this, but today I say that. And so, yeah, apparently, they did make the right decision and I would have had made the wrong decision. No, right? Totally given the power right back to the Federal Reserve. And it only makes their words, their signaling, their forward guidance, their job owning that much more effective. You see what he's doing? He's actually giving the power back to the Federal Reserve. See how they're in cahoots? These guys are working together. They're not fighting. They are not enemies. All right. All right. 10 minutes into this, let's get some questions going. I'll break down the credible threat theory for you guys. I was thinking about kind of going through it all, but I mean, I've done the credible threat theory so many times. You could go back and watch it, but I'll answer any questions that you have on it. To me, the credible threat theory is by far the most accurate way of looking at the economy at this point. I believe everybody else has got it inaccurate. They are looking at the Federal Reserve trying to get to a 2% target. Wrong. Right? The Federal Reserve is going for a 2% average inflation rate over time with no mathematical formula for figuring it out, and that the committee is seeking to achieve inflation that is moderately above 2%. Nobody's talking that way. Once you have incorporated that into your understanding of the economy, it totally makes sense why the Federal Reserve is positioned exactly where they are. This is what they were looking for. Nobody knows that. They're not going to communicate that out there. If they did, then the whole thing would fall apart. They would not be able to use their credible threats in order to use for their use in monetary policy. But once you understand it, once you see it, once you have internalized it, and then you go back and you look at what's going on right now, it's like, man, it lines up perfectly. Okay? It doesn't make sense when you listen to the narrative, because the narrative is the policy, is the monetary policy tool. What your understanding of it and how they deliver that message to you is it. They're gaslighting at its finest. People have this belief that there's going to be this expectation of the things that are being said out there, only to find out that none of it comes true. None of it's there. Right? Time will tell. It is a credible threat, meaning that it can happen. Right? It can definitely happen. But will it? Right? That's the question. Will it? People begin to behave and act in ways as if it already had taken place, but yet nothing has happened. Right? And even when it does, we have the tendency to think, man, it's going to be this extreme thing, only to find that maybe it wasn't. There's workarounds. There's ways of finding exemptions from it or something of that nature. Okay? The credible threat of it is far more impactful than the reality. All right, moving on here. All right, don't forget, we are still in quantitative tightening, not QE. Watch the bond yields. They will show the way. Yeah, I totally agree with that. We are in quantitative tightening, which is not, inflationary, but deflationary, or has a deflationary aspect to it. I mean, at least that's, the idea behind it, right? All right, liked and shared. Well, thank you. All right, all-nighter. Hey there. Right on, Brody. Thanks for being here. Thank you, all-nighter, for being here. Deja vu. Is the Fed too big to rig? Is it too big to rig? I don't know. Don't get me wrong. I'm not thinking the Federal Reserve is this great entity that's really there to support the people and all that other stuff. The whole system within itself is inherently going to separate the rich from the poor, because it allows for new money to continuously pour into the system. And anytime you have new money that comes into the system, you'll have separation between the rich and the poor. The inequality will only get worse. So the people who understand that can position themselves quite well. It's one of the reasons why I feel that Donald Trump wants interest rates to even go down, is because he understands that when you lower interest rates, more loans will be issued. More loans being issued is more money coming into the system and more separation between the rich and the poor, and the inequality gets worse. I don't think that he's attempting to try and create inequality. What he's trying to do is position or create an environment in which that his position gets that much better, right? Because that's the only reason why you would want to lower interest rates going into the future right now, at least in my mind, considering that the Federal Reserve is trying to get to neutral, which neutral is attempting to get to them with an elevated inflation expectation. So which one is it? Does Donald Trump understand that the Federal Reserve is attempting to get to neutral, and that lowering the Fed funds rate might pass neutral, because neutral is on its way to them due to the elevated inflation expectation? Or is lowering interest rates a good way of creating an environment in which that the rich elite become more rich and elite because of the inequality that grows from the new money that comes in, right? I'm not saying that's the reason he's doing it. I'm just saying that's a position that he would be in that would benefit him. And it benefit anybody who's rich, or any capitalist or property owner or anybody else. It's not just Trump, it's anybody who's taken that position. Right? I mean, I know I'm one of them. Like, I don't think I have a position as awesome as what I would like it to be or what other people have out there, but that's the position that I would have taken. Right? See, this is the thing about being in a working class position, but also trying to move into the capitalist property owner, is that I don't want to be left behind when it comes to the position of being where the new money comes in and elevates that position. Like, I don't want to miss out on that opportunity. But I'm also a working class individual who then has a paycheck that has to have a standard of living that can support a standard of living. These are almost contradictory things going on. That's why I've taken both positions. I don't know how many people see it that way. Most people usually see it one or the other, right? Either the capitalist property owner who's looking to advance and, get their wealth to increase, or you're the working class individual who's hoping their paycheck is going to be buying more, which, these two are conflicting. Might as well be both. All right. Mantra that depends on your monetary philosophy. Many would say no. What did that say? Mantra says, isn't inflation needed? Like, without inflation, the ability to print money, wouldn't we just run out of money in the system, like the Depression? Yeah, I believe that we would run out of money if we didn't continue to print if we didn't continue into the debt issuance, meaning like basically the government spending, then the Federal Reserve would not have the ability to continue on with the issuance of liability. They could, but they wouldn't. Right? Essentially they buy up the U.S. government debt. So if you have a situation in which that is slowing down, where the debt issuance is not taking place, like the government's backing off on their spending, and the Federal Reserve is in the quantitative tightening, they're reeling in that money. What's eventually going to end up happening, because we're a consumer-based society and not a production-based society, what we'll end up doing is buying foreign production. When we buy that foreign production, like the houses, or not the houses, but the couches, when you buy the couches, the clothing, the TVs, the cell phones, all that stuff, when you're buying those things, what you're doing is you're exporting money, importing stuff, exporting money. And well, if we don't keep producing money, eventually we'll export all the money and we'll be in the depression, because there won't be enough here to do the commerce with, borrow and lend to each other. So yeah, I totally agree with that. Now, whether it's a good or bad thing, again, it's depending on the position that you have taken for yourself. Some people will say it's a bad thing, other people would say it's a good thing. Again, that's all depends on the meaning that you have given it and the position that you have taken. All right. Hotep, really the most consistent way is to borrow, looking into house hacking. Thanks for answer. Been wondering about that. Yeah, you bet. So when the separation between the rich and the poor stops, the system collapses. Yeah. Essentially, yeah. I mean, it's not when the separation between the rich and the poor stops, it's when the new money stops pouring. All right? Now, if you want to relate, say, hey, we need to stop this inequality, and you're looking at the symptom and you're trying to deal with the symptom, right? Because the problem is the new money pouring in, creating this inequality. And so we're like, oh, we don't want to stop the new money from pouring in, but we want to stop the inequality. It was like, well, it doesn't work like that, because the inequality is the sign, it's the symptom of the new money coming in, right? And so it's like, people are like, well, how do we stop the inequality? It's like, well, that's the symptom. You don't want to stop the symptom. You want to go to the cause of it. If you want to stop the inequality, you got to go to the cause, and the cause is the new money coming in. If you don't bring new money in, then everybody starts to fall into pain and misery. So which one is it that you want? Do you want pain and misery, or do you want inequality? Like, that's the way to look at it. People say, I don't want either one. I'm like, well, I don't know what they're going to do, because you're going to get one or the other, All right. Thumbs up, folks. Yeah, please keep hitting that thumbs up button. That like button tells the YouTube algorithm to grab this video and spread it around for more people to join in. This is a really good topic to understand. The credible threat theory is by far, in my opinion, the best. There is nothing else out there that is as accurate as the credible threat theory is. I've been talking about it for years. I have not deviated one little bit from it. It has been, in my opinion, the most accurate going through all this stuff that we have talked about, everything that is occurring. It's not even like the theory anymore. It's the reality of the situation. Like, to me, I call it a theory because nobody else is talking about it, but it's not. It's the reality, right? And it's not even me who's saying it. Like, I came up with that title, credible threat theory, but it's not. This is the monetary policy of the Federal Reserve through their own words. They said it, right? Communication is everything. It's more important than the actual action. What it is that the markets are receiving for that information will then be the monetary policy. That's it. The adjustment of the Fed funds rate is secondary to it, right? The communication about that is more important than the actual adjustment of the rates. And understanding that it's this communication and how it is that they developed it then has, like, for me anyway, it has me now looking at the mainstream media for the evidence of the credible threat, because the mainstream media is delivering misinformation. It's delivering propaganda, and it's not like I'm saying, hey, they're delivering propaganda because because I'm guessing that. They literally said, the Federal Reserve literally said it in their own working documents. They said, we are going to find the different channels to deliver this information, knowing that there are certain groups of people that are not going to receive the information through the typical channel. Like, they're not going to watch CNBC. So instead, they deliver the information through The View. You see? Like, now, all of a sudden, they're talking about monetary policy when typically they wouldn't even give a shit. That's how the Federal Reserve is operating right now. And so if you can get everybody to then focus in and look in a particular direction and say, hey, this is what we're doing, and everybody says, yeah, that's what you're doing, now they got your attention. They can tell you, hey, we're doing this and that and the other thing, and everybody says, yeah, okay, that's what you're going for. You're trying to go for this 2% target. I get it. You can't get there. So now you have to, and they're like making all this stuff up, and none of it is real. All right? The Federal Reserve is not going for a 2% target. Nobody knows that. They're going for a 2% average inflation rate over time with no mathematical formula for figuring it out. It's crazy to think, but that is from their own statements, their own words. The committee is seeking to achieve inflation that is moderately above 2% for some time. They don't say how long. And when they talk about a 2% target, they're not even looking forward, they're looking backwards. They look backwards to see how far back they would have to go, considering all the inflation that we have experienced, to find the 2%. And I know that in itself is mind-blowing to a lot of people out there, but this is coming from the Federal Reserve itself. Type in, like, if you don't believe me, go and type this in: average inflation targeting Richmond Fed. Right? There's a very short, it's like one-page document. Go to the very last paragraph of that document and you will see right there within it that they talk about how it is that they find the average inflation rate over time, and it's backwards looking. Not forward looking, backward looking. So different from what everybody out there is seeing. They look at the Federal Reserve and this 2% target and they're like, oh, they can't quite get there, really struggling, having a hard time getting to the 2% target. And I'm thinking, you guys, this is not what they're looking at, right? Through their own statement, this is not what they're looking at. Mainstream media seems to think that. All these fancy economists seem to think that. All the people discussing the 2% target seem to think that, but nobody seems to understand that the Federal Reserve is not doing that. Mm-hmm. And again, it's not me trying to say, hey, man, they got it wrong. This is the Federal Reserve saying it, right? Let's see, 2% times 50 years equals 100%. How can the dollar inflation? First of all, 2% is meaningless because the Federal Reserve has never had a 2% inflation target. Like, they've had the target. They've said, hey, there it is, 2%. That's what we're going for. They've never once ever been there. You know that, right? Like, since 2012, when they adopted a 2% target, they had failed to achieve a 2% target for any kind of time, any kind of consistent time. They have never done it, ever, once, not once. I mean, they'll pass by it either above or below, and and they'll hit 2% on the way, right? But never once have they ever maintained 2% inflation. So why is it that people seem to think that they can go for a 2% target? I don't get it. They've never done it before. They've never been able to achieve that. And I have no belief that they can do it going into the future. But yet 99% of the people say that's their goal. And I'm like, well, since they've never done it before, I don't know why we would think they can do it now. You think you can do better? Run for president, keyboard warriors. Well, whatever. I'm not trying to say I can do it better. In fact, I don't know if it can get any better than what it is. Okay? I mean, I'm sure it could get a hell of a lot worse, but then again, the worse is depending on how it is that you positioned yourself. To me, it's just like, it's better to look at this for what it is, and then that way you can say, hey man, it's heavy stuff. It's, in my opinion, is probably not right, but then again, it doesn't matter what my opinion is because I can't change anything about the way it's being done. It's better to understand what's happening out there so I can position myself for it. And knowing the credible threat theory is being deployed right now in massive fashion. It's a propaganda media war campaign unlike anything that I have ever imagined seeing. All right? And that's what's taking place right now. Is a information war unlike anything that I had ever possibly imagined. Considering the things that I have learned about the credible threat theory from all these years and trying to incorporate it into my life, sharing it with all the information and with you guys, the information that I'm finding, I never thought it would be this dramatic. All right. I knew it was going to be tough, but I thought it was going to be things like, corporate debt lending facility type stuff. That's what I kind of envision as far as credible threats, where the Federal Reserve and the Treasury set up an entity during the COVID pandemic and said, hey, we're going to buy a bunch of corporate debt with hundreds of billions of dollars, and they spread that out throughout the media, and everybody flips out and they're like, holy shit, they're going to be buying up corporate debt. We better front run them. They jump out there, they start buying into these corporate debt. What ends up happening is corporations gorge on incredibly cheap debt, and the Federal Reserve goes and says, hey, oh crap, these corporations were able to find all the funding they needed before we even set up the facility. The credible threat alone was enough to do it. That's the type of stuff that I was expecting to be deployed into the economy. What we are experiencing now is massive, way more than I had imagined, right? But then again, I didn't know it was coming. I just knew that it was coming. Something was coming. The credible threats are very much alive and well right now. And it's like, again, it's gaslighting at its finest. Having the people believing and expecting a certain expectation in the future, right? Having that belief and that understanding and having it well communicated out there. Think about how well it was communicated within the people. Convinced them. Only to find it was like, well, we're going to put a pause on this one. Right? Nothing's happened. We'll find out what happens with Canada. We'll find out how much and how impactful 25% tariff on lumber is really going to be for lumber. I mean, they've been hit with tariffs in the past. Nobody cared. Very few people realize that we are underproducing lumber right now. We have the capacity to really ramp up production. We don't need Canada's lumber right now. Right? We probably never really did need it. We could probably have produced all the lumber that we need right here in the United States, considering how much exporting of logs that we do to China. I don't know how many people realize that. I live right here on the Columbia River and the Pacific Northwest, massive timber country around here, and those freighters are hauling massive logs out of this nation right over to China. And all over the world, actually. We have an insane amount of logs. Forestry is a huge agricultural industry here in the United States. We have loads of it. In fact, we have so many logs here in the United States that the loggers don't even really get a good price for it. Even when the lumber prices move up, there's still an abundance of logs. It's the world demand for the logs that starts moving the price up, not the lumber prices, right? They got more logs than they can make lumber from. Or they can turn in more logs than they can turn into lumber. That's what it is. All right, I heard something the other day about how there used to always be tariffs so that people didn't have to pay as much in taxes. Is this correct? Tariffs have always been implemented. I mean, you can go all the way back to the founding fathers and find tariffs and duties and, all kinds of stuff like that on imports. The point being behind it all is to understand that the tariff is implemented not necessarily just for that purpose, although it could be like for the taxes or whatever. To understand it, is like, think about why it is that the tariffs are being put on right now, right? The whole idea behind it is to try and bring some sort of manufacturing back to the United States, or to make the manufacturing here in the United States valuable against the cheap foreign production that is coming in. If you increase the production cost of it through tariffs, right, now you have a manufacturer here in your local area that can compete with that foreign production. That's the attempt, right? I mean, the idea that it's going to be used to offset taxes, okay, well, I guess that's a possibility from things that happened in the past, but that's not what they're talking about, right? That's not what's being, deployed as far as the information right now. It's the whole idea is to try and attempt to keep manufacturing here, and this whole idea that these foreign nations have been taking advantage of the United States. Like, this is comical. This is probably the funniest thing that I had ever heard. That foreign nations are taking advantage of the United States. And I'm thinking, wait a minute. We produce debt, right? We exchange U.S. Treasury debt, fiat currency, for work and production. Like, physical products from another nation is exchanged for a paper item that has only confidence for value. And somehow they're taking advantage of the United States? I mean, are you serious? The United States is probably the most, advantageous country in the entire world, considering that we're trading empty promises for physical items. They're not taking advantage of the United States, not in any way, shape, or form, right? When we get physical items and property and items, right, like actual built things, in exchange for a promise to pay, and we're taking advantage, or they're taking advantage of us? No, I don't think so, right? It's quite the opposite. Even if products are made in the U.S., you're still going to have to pay more due to the production cost increases and increased labor costs. Absolutely. No, there's nothing we can do. We're not fixing the system. I hope people realize that. There is no reversal to this. There's no fixing it, right? This is a cyclical thing that's on a particular direction. And it's going to be inequality, right? Inequality growing worse. Now, I think a lot of people misunderstand, like, thinking, okay, well, that means there's going to be rich and then people living in the streets, and that's it. Like, there's just going to be these two. That's not it, right? The people themselves are not going to have a life in which that they thought that they would have had, like, considering what their parents or grandparents have had. I mean, like, the house, the car, the vacation, all that other stuff. No, it's going to be way different from that. You're going to be all ride sharing and, renting apartments and stuff like that. It's going to be a much different existence out there. So you'll have property owner and capitalists, and then you'll have a working class people. And the difference is that to try and get over to that capitalistic position, that property owner position, in which that you are working, you're no longer working, you're independent of work, right, is going to be a huge step. Like before, like, there was a time in history in which that if you were dedicated to your job, and just like, even if it was just a regular old 9-to-5 job, didn't have to be nothing fancy, and you were disciplined, you could, rent an apartment, buy a car, save some money, and over time have enough to, move into property ownership and save enough to buy into 401ks and stuff like that and have a decent life. Nowadays, it's so hard to do that from a regular 9-to-5 job. Even a good job sucks. It's not enough. So people have this expectation out there. It's just like, hey, we need to create a situation in which my job is enough. It ain't going to work like that. You're going to have a job, and then you're going to have side hustles, and then you're going to have to be incredibly disciplined on top of it if you want to compete. Because that's what everybody's starting to do. They don't just have the 9-to-5 job. They're doing Amazon affiliate sales. They're doing, some sort of marketing of whatever. I mean, I don't know. There's a million ways of going out there and making money now. And since people have multiple ways of making money, now an average job has to compete against somebody has multiple ways of making money. And it's not even like they're rich. They just have this different avenues of cash flows, which then gives them the ability to rent that apartment when the 9-to-5 job guy can't do it anymore. Right? And that's what we can expect going into the future. It's going to get worse. That problem is going to get worse if that is a problem, right? So to understand that's the situation means that, okay, my 9-to-5 job, although I think it's hard and it's working and it should be enough, is probably not going to do it. Either I have to become incredibly disciplined or I have to find more avenues of money, right? And that's ultimately what you're going to have to do is both. All right, 645 people watching. This is amazing. Okay. I have about 10 minutes left here, guys, and I got to quit, but this has been a really good live stream. I think this is important, understanding the credible threat theory. I think it's like right now is more prevalent within the economy, within the mainstream media narrative than ever, right? So understanding how the credible threat theory is being deployed is very important. It's like probably the most important thing to understand right now, because we have nothing that's taken place, but yet the dramatic impact that people are feeling from it is very profound within the economy, right? And it will have an outcome. All right. Is it possible that introducing tariffs is a means of taking money out of the system after the $4 trillion printed during COVID, reducing inflation? The only way to take the money out of the system is to relieve debt. Is to either pay off debt or relieve debt, just like write it off. That's the only way to get money out of the system. All right. And if you do not create more, then it will naturally decrease, right? Over time, debt is paid off, like it has a due date. When that debt is paid, if it's rolled into new debt, then that's, that would be a continuation. But if it's comes to an end and it's not rolled over into new debt, that is money disappearing from the system. So the less debt issuance and the less debt being taken out, or the more debt is paid off, that is the decreasing of money. That is the deflationary scenario that is happening. Now, at some point, it will result in prices, because people have a tendency to just look straight at prices and say that's the inflation or deflationary scenario, but that's not really the correct way of looking at it. The correct way of looking at it is the debt issuance. The more debt issuance or the less debt issuance, or decreasing of debt, or the paying off of debt, right? That would be the deflationary scenario. And so, again, like inflation, a lot of times people have a tendency to just relate it to the quantity of money, right? Which is the simple answer. And that's true in a sense that, like, without the quantity of money being increased, you couldn't really have the inflationary scenario in a dramatic fashion. But that's not exactly true either, since money velocity can create an inflationary scenario without the additional use of money, right? Just like if a bunch of money is sitting in a bank, it's not going to chase goods and services. But the moment that money gets out of the bank and starts chasing the goods and services, and you have money velocity picking up, then you'll have an inflationary scenario that can come from it, right? Regardless if you continue to increase it. If that money velocity continues to pick up, then people are going to demand more money for their products and goods and services out there. So knowing that the inflationary scenario really comes from an increase in demand versus the amount of supply that's out there. If you increase demand and you have a steady supply, then you're going to have an inflationary scenario. If you have a drop in supply, even though you have steady demand, you're going to have an inflationary scenario. If you have a drop in demand and a steady supply, you're going to have a deflationary scenario, right? Steady demand, increase in supply, deflationary scenario. So it's better to look at it from supply demand side of things as opposed to quantity of money, because the quantity of money is a very short-sighted, almost naive way of looking at it, right? It's not exactly, it's part of it, but it's not the whole story, and it's not complete. Because if that was the case, then we could look back to 2008 and the great financial crisis and the increase of the balance sheet from the Federal Reserve going from $850 billion to over $4.5 trillion failed to produce the inflationary scenario that the Fed was looking for. So it's not just the quantity of money, or else we would have seen it there, or the Fed would have. We saw it, but the Fed would have seen it. Right? the inflation that they were looking for. They couldn't get it. And even Donald Trump at the end of his administration during that time was saying there's no inflation, the Fed should be printing money. Again, it's credible threats, and he wasn't really wanting that, but he was saying it, right? Alrighty, guys, this was fun. Oh, did I get another one? Hold on one second. I got another super chat. Let's go check that one out. Thank you, Tom, for the, what was it, $5? Oops, where is it? Where did those things go? Hold on one second. Super chat. There we go. Yeah, thank you, Tom, for the $5. I really appreciate that. You guys have always been so supportive of the Uneducated Economist. I can never thank you guys enough for that. All right, Shaylee, thank you for the $5.50. Is it a good idea to invest in a small piece of land, like 1.5 acres, if I can pay cash for it? In my opinion, land is probably never a bad idea, right? Now, I guess it could be a bad idea if it's in the wrong location, like really remote, and the chances of selling it to somebody else might be pretty low. But considering that the population is only going to get bigger and that the amount of land available is limited, right? So if you have land in a area that is of some desire, I can't imagine that being a bad investment, right? Now, that's me personally, and I don't give investment advice, but property ownership and capitalists are the only two people who live independently. What you plan on doing with that land is very important. I mean, just the simple possession of the land with the idea that you're going to sell it into the future is a speculation. That's not really an investment. An investment is when you have a plan to have some sort of return on that. I'm going to buy this land, put a rental property on it, and then collect the rent, right? That's an investment, something of that nature. So again, is it a good idea? Hey, what meaning are you giving it, right? Are you giving it a speculation investment idea, or are you giving it an investment idea? You guys are awesome. I'm going to have to call it quits. I got to go back into lunch, but this has been an awesome live stream. Thank you all for being here. Keep hitting that like button. We got 598 people. I want to stay out here for another 2 minutes. Everybody take the opportunity to go hit that like button. Give this video a thumbs up. We'll spread it around for more people to join in. It is very important that we start discussing the credible threat theory. It is important that people start internalizing this information. We are very few. Right? Those of us here on the Uneducated Economist who have been pushing this idea and talking about it regularly, we're the very few people who can truly see this stuff. Everybody else is lost, right? If you don't know about it, then you're not going to be able to see it. And that's the unfortunate part of all this, is that it's not information that is being deployed into the mainstream media. And we know that they're deploying the information for their monetary policy purposes through those communication practices. We look at those communications as the monetary policy tool, the credible threat, not what they're talking about. The subject that they're talking about is the Fed funds rate, but it's the communication about it and how people are receiving that information is the profound impact on the economy. And I know that's difficult to understand. It's hard to explain it, right? It's hard to explain that to people, that what they are looking at is the propaganda that is now the forward guidance, that is the monetary policy. As people say, well, when are they going to cut? And I'm thinking, well, you missed it, right? If you ask the question, when are they going to cut or are they going to increase? You missed it. Uneducated Economist, you guys let me know.